Hello investors, and welcome to our channel. Today, we are doing a deep dive analysis of IDEXX Laboratories, traded on the NASDAQ under the ticker IDEXX. IDEXX is perhaps the most important company many investors have never heard of. It is the absolute leader in veterinary diagnostics. Think of it as the Johnson & Johnson or the Roche of the pet world. In this video, we will dissect IDEXX's business model, understand why its economic moat is so powerful, and analyze its strategy, its incredible financial strength, its capital allocation, and of course, the risks. The investment thesis here is clear. IDXX benefits directly from two of the biggest social megatrends of the last few decades. First, pet ownership has been growing secularly since the late 1980s. The 2020 pandemic accelerated this, creating a new generation of pet parents. Second, and more importantly, is the humanization of pets. Owners no longer see their animals as simple creatures. They are family members. And what do you do for a family member? You spend whatever it takes to keep them healthy. Data from the APPA, American Pet Products Association, shows that pet spending in the U.S. exceeds $150 billion annually. Today's owners are willing to triple their spending on products and services compared to 1994. IDEXX is perfectly positioned at the center of these two trends. Let's understand how. The business model, the IDEXX ecosystem. How exactly does IDEXX make money? The genius lies in its ecosystem strategy. It doesn't just sell a product, it sells a complete and integrated solution for veterinary hospitals. IDEXX's business, specifically its main segment, the CAG, Companion Animal Group, rests on four main pillars. Pillar 1, internal analyzers, the razor and blade model. IDEXX is a leader in in-hospital analyzers. These are the machines that sit inside the veterinary clinic. The company aggressively places this equipment in clinics, often for a low initial cost or on a placement basis. These are the printers, or the razors. IDEXX makes its real money on the proprietary consumables that these machines use. Every time a veterinarian runs a blood test, they use an IDEXX slide or kit. Pillar 2, disposable rapid tests. High margin, high convenience. IDEXX dominates the market for in-office disposable test kits, like the famous SNAP line. These are premium-priced products with extremely high profit margins. Why? Convenience. The veterinarian can give the client a diagnosis in under 10 minutes without needing to send the sample to an external lab. Pillar 3, external reference laboratories. For more complex tests, IDEXX maintains a very strong position in external reference laboratories. Historically, this area has grown by double digits. IDEXX has a vast logistics network that collects samples from clinics and delivers results quickly. Pillar 4, the glue of the ecosystem, software and sales. Now, here's the magic. IDEXX doesn't just sell the products. It sells the system that integrates them. It owns clinic management software like Cornerstone, which functions as the veterinary hospital's operational brain. And who ties it all together? An incredibly strong sales organization, which doesn't act like a simple salesperson, but as a business consultant to the veterinarian. This ability to cross-sell multiple products and services is what makes IDEXX unique. And now, it seeks to replicate this massive U.S. success in developed international markets. The secondary, but not small, businesses. Although the companion animal market is the bread and butter, IDEXX's ability to innovate extends to two other profitable businesses. First, water testing. Municipalities are required to routinely test their water supplies. IDEXX developed a unique test that detects the two most common bacterial contaminants, coliforms and E. coli, more easily and quickly than traditional methods. The result? IDEXX has captured over 60% of this market. Second, livestock and poultry diagnostics. IDEXX is a leader in tests for cattle and poultry, including essential diagnostics for diseases like foot and mouth disease. And the innovation doesn't stop. The company is constantly developing new tests, with a current focus on diagnostics for oncology, cancer, and ear infections in animals. The economic moat. If you are a long-term investor, this is what you look for. IDXX has a wide economic moat built on two primary sources: switching costs and intangible assets. Source 1. Switching costs, the sticky ecosystem. Imagine you are a veterinarian. You install IDEXX's management software. All your patient records, histories, billing data. Everything is in there. Your staff spends months learning to use this system. Now, imagine the cost, time, and headache of migrating all of that to a new provider. It's an operational nightmare. The same goes for the analyzers. Once the clinic installs IDEXX equipment and trains its technicians, it is locked in to buying IDEXX's proprietary high-margin consumables. When you integrate all three, the management software, the in-house analyzers, and the results from the IDEXX reference lab, all flowing seamlessly, the switching cost becomes gigantic. The numbers prove it. Analyzer consumable retention, 99.5% reference laboratory retention, 97.6% rapid test retention, 97%. This is stickier than many software, SaaS businesses. Source 2, intangible assets, TE, secret weapon. The second source of the moat is intangible assets. This includes the technical know-how and intellectual property of its tests. IDEXX competes on features and innovation, not on price. It is always launching better, faster, and more accurate tests. But the real secret weapon for IDEXX lies in its sales force and field support. IDEXX representatives don't just show up at the clinic to take an order. They act as consultants, analyzing the clinic's data and advising the veterinarian on how to optimize their operations, improve protocols of care, and, crucially, increase the clinic's profit profile. This level of service creates a deep relationship. The proof. In 2015, IDEXX made the bold decision to switch to direct distribution for its rapid test kits, cutting out the three largest animal health distributors. Its competitors thought it would be a disaster. But thanks to the strength of its direct relationship with veterinarians, IDEXX did it without suffering any competitive scratches. Finally, its reference labs also have a cost advantage due to their massive scale, route density, and efficiency, making them more profitable than smaller independent labs. Financial analysis and profit drivers. An economic moat is only valuable if the company is financially healthy, and IDEXX's financial health is rock solid. Historically, the company has funded its expansions and acquisitions almost entirely with its own cash generation. Unlike rivals, IDEXX has always taken a conservative financial approach. The company generates extremely high free cash flow, FCF, consistently in the 15% or more of sales range. Although the company increased its leverage in 2015 to fund share buybacks, reaching 3.1x debt-EBITDA, management quickly reduced this. Today, the debt-EBITDA ratio is well below 1.0x. This level of debt is absolutely manageable and gives the company enormous flexibility for future acquisitions. Drivers of future profits. Looking ahead, what are the drivers of profit? Post-pandemic pet boom, puppies. Consumable growth, recurring revenue. Cross-selling opportunities. Capital allocation and management. How management allocates the capital generated by the company is crucial. And here, IDEXX gets top marks. Management excels in two areas. 1. Balance sheet management. As we saw, they are conservative, keeping debt low and flexibility high. 2. Investments, M&A and R&D. IDEXX has an admirable history of strategic and intelligent acquisitions, buying companies to expand its presence in Europe, like VetMedLab in Germany, or in livestock diagnostics. Most importantly, management invests heavily within the company, in R&D to maintain innovation, and in training for its sales force. It is these internal investments that dig the economic moat even deeper. The management transition, following the tragic accident of former CEO Jonathan Ayers in 2019, was executed masterfully by his successor, Jay Mazelsky, who maintained the long-term strategy that made the company so successful. There is, however, one common criticism made by analysts about IDEXX's capital allocation: shareholder distributions. IDEXX does not pay dividends. It relies heavily on share repurchases to return capital. The criticism is that, given that IDEXX shares historically trade at high multiples, the company might be using its cash to buy back shares at prices considered stretched, which may not be the most efficient use of shareholder capital. Risks and uncertainties. No analysis is complete without looking at the risks. IDEXX has a medium uncertainty rating. What are the concerns? Risk 1, competition, the elephant in the room. IDEXX is not alone. Its main competitor is the animal health giant, Zoetis, ZTS. In 2018, Zoetis acquired Abaxis, a direct competitor in the analyzer space. Zoetis has immense resources and is competing fiercely. IDEXX's line of rapid tests is considered the most vulnerable to this competitive pressure. Risk 2. Economy. The bull thesis says that pet spending is recession-proof because it's paid in cash without pressure from insurers. The bear thesis says that in a serious recession, owners might reduce veterinary visits, skip preventive exams, or be reluctant to invest in expensive diagnostics. This would hurt clinic revenue and, consequently, IDEXX. Risk 3. Exchange rate risk, strong dollar. International sales represent a substantial portion of total revenue. When the US dollar strengthens, as we have seen, those international profits are worth less when converted back to dollars, which puts pressure on financial results. Risk 4. High expectations. Shares of high-quality companies like IDEXX generally trade with high expectations. This means that even a small slip in results or a slight reduction in animal health spending could result in a significant negative reaction in the stock price. The market does not forgive imperfections in perfect companies. Conclusion: the investment thesis. So let's summarize the investment thesis for IDEXX Laboratories. The bull investor, optimist, sees a company exposed to the secular megatrend of pet humanization. A brilliant business model combining the razor blade, analyzers and consumables, with software recurrence, SaaS. A wide economic moat protected by extremely high switching costs, 99% retention rates, and intangible assets, R&D, and a consultative sales force. A financial fortress with low debt, massive cash generation, and exemplary management. The bear investor, pessimist, sees brutal competition from Zoetis, which is eyeing its market. Vulnerability to an economic recession that could curb premium pet spending. A market that already has very high expectations for the company, leaving little margin for error. IDEXX Laboratories is, without a doubt, a company of the highest quality. It has built a nearly impenetrable fortress in the animal health sector, transforming the love for pets into a predictable and highly profitable business. The question for the investor is not whether IDEXX is a good company. It clearly is. The question is whether future growth justifies the market's high expectations and if its moat is wide enough to defend its territory from Zoetis for the next 10 years. I want to know your opinion. Do you believe in this economic moat? Is the pet humanization thesis strong enough to overcome a recession? Leave your analysis in the comments below. And if you enjoyed this deep dive, don't forget to subscribe and turn on notifications. Thanks for watching, and see you in the next analysis.